Hey yo, peek back with another one, man. It's your boy Ben Holmes coming at you quick with some financial news. So let's get to it. So last week I came out here and reminded everybody that the Fed just raised rates 25 basis points, which will make the Fed's 9th interest rate raise over the past year. That's right. This time last year, interest rates were right around 0.08% for our Fed funds rate. Now they're right at 5%. Why? Because this is how the Fed fights inflation. If you want to get a breakdown of that, check some of my previous videos. But this is the most important part of the conversation that I have not yet touched. So the Fed actually said that they're only going to raise rates one more time, and they expect it to peak at 5.25%. Now, this is a totally different tone from what we was hearing just a couple weeks ago. They were saying that, hey, we might have to raise rates aggressively over the next year. But all of a sudden, we're only going to get one more interest rate raise. Guess what? The market is not buying. Why? Because based off the website CME Group, the market actually think that there's a 65% chance that rates will be lower, meaning they think the Fed is going to have to actually pivot from their current stance. So instead of actually sending rates higher, they're going to have to decrease rates because the banks are going to be in such bad shape. Interesting. Man, I'm telling you, I do not envy this man, Jerome Powell, at all. He only gets paid $200,000 a year to deal with this.
What is the salary of the chairman of the Federal Reserve Board?
It's around $190,000, I believe.
Okay, so you think that's a fair salary for the job, or?
I do, yes.
Nah, I'm good. All money ain't good money. Because here's the thing, right? It's like if you raise interest rates on one side, you're probably going to destroy the banking system. But if you lower interest rates, you're probably not going to deal with inflation the way you want to. So what's going to happen? I'm going to tell you what's going to happen. You're going to hear this new word in the media being pumped down your throat. It's called stagflation. Last year, I know inflation was the hot button word and the hot button topic. But this year, it's going to be stagflation because you're going to see high unemployment and you're also going to see high inflation at the same time. And it's going to be a very, very, very interesting market for the next year, in my personal opinion. Now, do I think we're going to see this huge crash or whatever the case may be? I think it all depends on CPI numbers, right? Like, honestly, next month is a very critical month when it comes to our CPI numbers. It has to come in at 5.7. Anything higher than 5.7, I think we're going to see a rough 2 to 3 months because the market's going to finally be shocked and understand where this could possibly go. And it's not going to be pretty. But if inflation is under control, I don't know, we might come out of this thing a little bit better than expected. But you never know. Anyway, this is Ben Holmes, your Chief Inspirational Officer, helping those with a CEO mind take authority not only over their life, but their money. So until the next time, check in, check out. Peace.